God bring you in your life. Suraksha, that is safety. Samriddhi, that is prosperity. Sehat, that is good health. Sampatti, that is wealth. And Samadhan and Shanti, that is peace.
Inaugural speech by Professor Ananth Narayan. The benefit. Professor Ananth is an additional director nominated by RBI on the board of Yes Bank. He is also an independent director on the boards of SBI Capital Markets, Clear Corp Dealing Systems, Care Ratings, and Dwara Research. He is a senior India analyst with Observatory Group LLC. He is a member of SEBI's Mutual Fund Advisory Committee, FICCI's Capital Markets Committee, and Kerala Infrastructure Fund Investment Committee. Ananth has 24 years of experience in banking and markets, last as MD and Regional Head of Financial Markets, ASEAN and South Asia with Standard Chartered Bank. He has served as Vice Chairman on the board of Fixed Income Money Market and Dealers Association, Foreign Exchange Dealers Association of India, and on various RBI committees. Speaks, writes, and consults about macroeconomics, monetary economics, markets, and financial services.
Happy Deepavali, everybody, and I wish this venture all
for a good financial advisor. Look at the bewildering number of investment choices that we have in front of us, starting with fixed deposits, going on to bonds, let's say tax-free bonds or government bonds, going on to corporate bonds, then going on to debt schemes of mutual funds. From there, going on to equity schemes, within which you have large cap, mid cap, small cap, all sorts of different kinds of schemes. Then you have commodities. We all have some amount of gold in home. There are other commodities which are traded. Then there is foreign currency now. We are all allowed to take out foreign currency every year, $250,000. Likewise, you can also invest or something called fund of funds, where you can invest in foreign markets from India itself. You have real estate. We all have some real estate investments. And we have funny things like Bitcoins nowadays, and you can also put money in other people's businesses, venture capital, etc. It's a bewildering array. And trying to do this on your own, choosing where you want to put in money, etc., can be extremely confusing. I'll just use that point to reiterate the fact that we all need professional advice, including supposed experts who are supposed to be tracking these things. Now, how is it that companies like Dharmasastha Securities can help, and how do they actually help? I'll try and tell you some of the science behind investments, which I find kind of interesting. And let me start with one question which I would have asked students if it was a classroom setting. Who do you think makes better investors? Is it men or is it women? Okay, it's a trick question, so the trick answer has to be women. It is women, by the way, and it's not me saying it. It's not somebody's opinion. It's actually backgrounds, right? This research, by the way, was by Barber and Odian, and I can forward the reference later on if required. What this found was that accounts which were being run by men, so where the man was the decision maker, they consistently produced a return of almost 1% per annum below accounts run by women. Okay, here was an interesting twist. Single men who did not have a woman in the household consistently provided a return about 1.5% per year lower than single women. What they found out when they dug a little more was that men tend to trade far more than women. And then they came with a behavioral explanation as well. What they figured out was men are behaviorally overconfident. In fact, you would say confidence, I would call it overconfidence. Men are behaviorally overconfident, so therefore they think they know, therefore they trade, and therefore they lose money. Okay. The long and short of this entire example is, the more you transact, the more you trade, the more you buy, sell, shift in, out, etc., the less your return is. And women, because they are behaviorally, and again, this is backed by research, this is not my opinion, because women are behaviorally a little more cautious, a little more self-doubting, therefore they trade less and therefore make more returns. Okay. One takeaway from this: if you're trading a lot, you're probably doing something wrong, other than if you're a day trader and you're doing it for a profession. That's a different issue altogether. But for most people, the less you trade, the better. And this is the question of active returns. Now, what is active returns? All of us get dozens of tips through the course of any normal day. In fact, I get, because I'm in the markets and I'm on several WhatsApp chats, and WhatsApp University gives me a lot of knowledge and gyan. Buy this, sell that, today is too high, tomorrow is too low. So the question which comes up is, what determines your investment return over a time period? Okay, is it the choice of security, which is you chose HDFC versus Dewan Housing? You chose ITC versus Infosys. Is it the choice of security which determines the return over a long period of time? Is it the timing, that today markets are too high, so let's sell? Let it come down by 1,000 points on Nifty, then I will buy. Is it the timing which determines the return? Okay. And the interesting part was, after much analysis, and there was this very seminal paper done by somebody called Brinson, Bauer and Hood. Okay, B. Bauer and Hood. What they found was things like timing, things like choice of securities barely accounts for 7 to 8% of the return. Okay, or the variation in return. A bulk of the variation in return is purely determined by what is called asset allocation. What does asset allocation means? If you decide I'm going to put 20% in large cap, 10% in mid cap, 30% in fixed income, 20% in real estate, 10% in gold, and so on and so forth, that is an asset allocation. Once you have decided asset allocation, things like timing, things like choice of securities, does not determine the actual return. It is the asset allocation which determines the return. This sounds very incongruous. Now, people who have bought HDFC versus buying Dewan Housing have obviously done tremendously better over the last 10 years. But what this research tells us is, our ability today to figure out which is the next Dewan Housing, which is the next HDFC over the next 10 years is very, very low. So for everybody who chooses HDFC, there'll be somebody who chooses Dewan Housing. So to think that we can beat the system going forward is very, very difficult. Okay. So the simple point is, we spend a lot of time on individual securities, individual investments. That is not what is important. What is important is determining the asset allocation, which makes most sense for us. And determining asset allocation is where a good securities advisor like Dharmasastha Securities can help you with, depending upon your age, depending upon your risk preference, depending upon your aspirations. They can design what percentage of your wealth needs to be in equities, in commodities, in debt, in real estate, in foreign currency. All those kind of questions can be brought about. Okay. Takeaways that they kind of provided to me, some of which I'm sure you know in some form or the other, you would have heard it. First is the power of compounding. My father, for instance, wanted that fixed income return of 6%, 7%, 8%, or whatever that number was. And it sounds like not very different from, let's say, a 10% that was being promised in equity. Remember that over a period of time, that difference will amount to a large number. So you have to keep that in mind. The power of compounding is very, very important. Second thing that you have to remember is you have to avoid a quiz question. Again, as a professor, I have to ask quiz questions. What do you think has provided better returns over the last 10 years? Is it Indian equities or is it US equities? US equities being Dow Jones or S&P 500 or NASDAQ, right? Over the last 10 years and over the last 20 years, what has provided a better return? Okay. Here are some surprising results. It might not be surprising for some of you who track the markets, but it was surprising for me when I saw it first. So if I remember correctly, over the last 10 years in dollar terms, you cannot compare rupee returns and dollar returns. Let's say in dollar terms, over the last 10 years, Nifty 50, our NSE main benchmark, clearly, which is at all-time highs right now, 12,700, wherever it is, it's at all-time highs. Over the last 10 years, in dollar terms, it's barely provided 2% per annum return. Okay, which means between 2009 October to now, or 2009 November to now, or 2010 November to now, it has barely provided 2% return per annum. Okay, this goes back to two things. One is I told you about the power of compounding. This 14% differential, 2 to 16% differential, amounts to a large number over a 10-year period. Second thing is the point being that different markets tend to give different returns over different periods of time. Okay, the whole point about diversification is exactly this. You and I can, over a cup of coffee, discuss what is going to do well over the next 10 years. Reality is we are tossing a coin. We have no clue. If you want to get the risk to be minimized, if you want to try and protect the portfolio, you have to diversify across different asset classes. It goes back to the point that asset allocation is the biggest choice that you have to make. And within asset allocation, if you're going for diversification of risk across different asset classes, your chances of having a very bad or an extreme return, either very high or very low, gets reduced. You come to somewhere in a thank you for getting into this particular business, and I wish you all the success. I'm sure you'll do extremely well. It is a complicated area. All those clients who have dialed in, my request to you, please use their services and make sure that they are transparent. And from your side, Dharmasastha Securities, I'm sure you will provide all the reason for people to trust you. And I wish you success over several years, several decades. And I hope and pray that you grow into a really large advisory services. You will be doing human service for our community and for the Indian investors in general. Thank you very much, and back to you, sir.
Now let me call upon Mr. Shankar to talk a few words about DSS.
These are the areas which I wanted to focus in my presentation with regards to power of compounding, with regards to the importance of advisory services, with regards to the transparency, with regards to the trading, with regards to all the kind of... Dharmasastha Securities wanted to inculcate the successful mantra to all the clients who are coming to us. So now let me give a brief about what is Dharmasastha Securities and what we are into. So we are a one-stop shop providing services in financial savings and investments, offering unparalleled investment opportunities and bespoke services. We ensure responsible marketing of financial products on exclusively based on the client's requirements. We have a panel of independent expert committee members who oversee risk, compliance, business ethics, as well as data integrity and privacy. We also have an in-house research team, and this research team follows the principles of EIC for our own researchers. EIC means economic, industry, and company analysis. We stress more on the future growth prospects of our company as well as industry, rather than focusing on mere past previous performances, financial performance, and personally meet the industry experts. And we used to have a discussion with them to understand the end-to-end business processes, to understand the key business triggers of the company. We come out with a SWOT analysis, which will give us an idea with regards to where the industry is hedging towards. As Dharmasastha Securities, we also provide psychometrical analysis of the prospective client's portfolio with no strings attached to it. We have our own software which will help our clients for multi-asset tracking. So with this, let me conclude, and the journey towards financial prosperity begins from now on. Thank you.
Hi. Good evening to you all. It's my privilege to propose a vote of thanks and acknowledge the contribution of everyone for making this event a big success. My sincere thanks to Almighty for making our first step a resounding success. On behalf of Dharmasastha Securities, I extend a humble vote of thanks to our chief guest, Professor Ananth. Once again, I thank everyone for your participation and wish you all a very happy and a prosperous.
A customer is the most important visitor on our premises. He is not dependent on us. We are dependent on him. He is not an interruption in our work. He is the purpose of it. He is not outsider in our business. He is part of it. We are not doing him a favor by serving him. He is doing us a favor by giving us an opportunity to do so. Thank you all once again.